Good morning and welcome everyone to the Moneycontrol live stream. I'm your host Nickey and you're watching the opening bell. Well, Indian equities are set for a tepid start ahead of the key macroeconomic data. GIFT Nifty indicates a mildly negative start coming in for Indian equity markets. US market closed higher ahead of the data that could influence Fed rate hike decision. This includes monthly job and personal consumption data overall. Along with that, you have Asian shares which have climbed higher early this morning with bunch of economic data that continues to be in focus. FIIs continue to sell shares to an extent of 1,393 odd crores, and DIIs too have purchased shares to an extent of 1,264 odd crore. In terms of economic data that we'd be tracking back home will include something in the like of GDP data, which will be coming in later on Thursday. But of course, there's going to be some amount of risk-off sentiment that could be witnessed well ahead of that. In terms of highest delivery, we've seen stocks interest coming in HDFC Life Insurance Company, Infosys, Bharti Airtel, Bajaj Auto and Pidilite. There's a long build-up which has taken place in Indiabull Housing Finance, ONGC, Punjab National Bank, Piramal Enterprises. Along with that, there is also long unwinding which is taking place in Forge, Sun TV, GMR Infra, Escorts, Wipro, amongst others. Also, we've seen short build-up in Mphasis, Delta Corp, along with Info Edge and Reliance Industries. Let's also talk about the short covering activity in Metropolis Healthcare, along with that of Ramco Cement, beg your pardon, and Oracle Financials out there, along with Tata Chemicals. In terms of FNOQs that we have, well, FIIs have been net buyers in index futures and also have been net buyers in stock futures. Overall, also a bit of sentiment which is prevailing in for Bank Nifty futures. They've been sellers, however, in Bank Nifty options, along with that of index options. In terms of the FNO ban, what still remains in the ban? Well, we have BHEL, which still is in the ban. Escorts, India Cements, and Hindustan Copper are among some of the names, along with GMR Infra, RBL Bank, and Sun TV. What is new in the ban? Indiabull Housing Finance. In terms of PCR, well, inching a little bit higher towards 0.99 as compared to 0.83 that we've seen in the previous day. In terms of the technical side, a lot needs to be spoken about given the kind of risk-off sentiment that we're witnessing across the globe right now with slew of macroeconomic data. A little bit of trigger probably from the index heavyweight, but let's bring in Osho Krishnan, Senior Analyst, Technicals and Derivative Research at Angel One. Morning there, Osho.
Good morning, Nickey. Thank you for having me in the show.
Pleasure is all ours. I'm going to start off by asking you about your assessment on the trade setup, the strategy for Nifty and Bank Nifty along with that of RIL.
See, overall, we are witnessing a very slender range-bound movement in the benchmark indices. For Nifty, the range is very much stuck towards 19,200 on the downside and 19,500 on the higher end. So until we surpasses these levels decisively, either on the higher or lower side, we are going to witness some kind of consolidation. So better we have to gauge the momentum by buying the dips and even selling on the rise. So we have to have approach. Our approach should be that we should try to accumulate or try to buy the index near the support zone of 19,250 to 19,300, and on the higher end 19,450 to 500 is the zone where we should try to book our profits, and even aggressive traders can go short in the counter. Similarly, in Bank Nifty is outperforming the benchmark index, but overall the resistance is very nearby. 44,800 to 44,900 is a very stiff resistance for Bank Nifty. So we are expecting that any up move towards 44,900 could be seen as a short opportunity for the short-term traders. So we should have the approach where we should try to buy on the dips and sell on the rise in both the indices. But for the day, we will be more focusing on the stock-centric approaches.
Sure. Also, could you talk about RIL and Jio Financial Services post the AGM that has taken place? How do the technical charts look like?
The overall Reliance is looking very subdued because there is no very intense movement in Reliance as of now. because from the levels of 25, 40, 25, 50, we are witnessing some kind of correction in the counter. But after the AGM, it was expected that the volatility will pitch in this counter, and even the AGM was very much up to the expectation and even higher than the expectation. So from here onwards, we can expect that the time the breaches 2500 zone, we can see a very strong up move in the Reliance. And similarly, Geo Finance is having a very sell-off pressure is witnessing in Geo Finance.
All right, Osho. All right, we got your point. A bit of sell-off pressure in Geo Financial Services out there, but we're going to get back to you and first address the markets open. Well, we are looking at a positive start coming in for Indian equity markets, 19,350, well above that mark. Perhaps thanks to the global cues, we're seeing a bit of appetite building in for Indian equity markets, despite a bit of risk-off sentiment that we're seeing globally ahead of the macroeconomic data and GDP data that we have back home on Thursday. 19,350 mark, well above that level. In terms of Bank Nifty, let's look at that. How is that stacking up? Well, we're looking at gains to an extent of 0.3% coming in for Bank Nifty too. 44,600 mark, well above that level. In terms of the mid-cap index and the small-cap index, gains to an extent of larger counterparts, 0.3% clocked in for mid-cap index and for small-cap index too. Well, a bit of outperformance coming in for that one with gains to an extent of 0.5% out there. In terms of the sectoral indices that we have, IT continues to gain traction. We're seeing gains to an extent of 0.5%. Pharma too contributes to the rally, 0.3% clocked in for Pharma index. And let's talk about the FMCG basket holding up in green. 0.1% clocked in for FMCG basket too overall. In terms of the rate sensitives that we have, auto seems to be doing well for yet another session. Let's also talk about metal and real estate index overall. Metal, yet another session of gains coming in for metal. And let's also look at the trend stacking up for realty index just to see if that is the one which also seems to be doing up and about with gains of 0.5% out there for realty index right now. In terms of the top gainers and the top losers that we have on the screen, just to see how even RIL is doing post the big AGM that we had. And of course, it has a bearing coming in for the Indian equity markets. But let's address the top gainers first. You have UPL, Hero MotoCorp, Tech Mahindra. These are some of the top gainers that we have on the list, along with Cipla, GSW Steel, and HCL Tech. These are some of the other top gainers that we have overall on the index, along with that of Sun Pharma, Ultratech Cement, and ICICI Bank. Well, advances 42, declines 8, market breadth in the favor of advances. Let's address the top losers. Reliance is the top losers in today's session. Apollo Hospital and DRL are some of the top losers that we have on the list, along with Adani Ports and Axis Bank. These are some of the top losers that we have, but clearly it's a bit of pressure coming in from the index heavyweight, RIL. That needs to be addressed a little bit. We're going to get back to Osho. Ahead of that, let's address stocks and news that we have early this morning for you. Let's start off with RCF first and then go back to Osho, where, it's a Moneycontrol exclusive which is coming for RCF, where the OFS for RCF and NFL, both of this has been delayed due to investor disinterest. Finance Ministry aims to sell 10% in RCF, 20% in NFL to the stakes worth around 1,200 crore. The target for divestment is 51,000 crore in 2023 to 24, and overall for this year, via the disinvestments that have taken place, it's only to an extent of 5,600. That's nearly 10% of the targets, as per the sources to Moneycontrol. What we also have this morning is PG Electroplast, which is launched in an QIP to raise 500 crore, and this is going to be at a floor price of 1,640 odd crore for utilizing the proceeds towards the working capital requirements of the subsidiary. With this, the dilution would be to an extent of 14% odd on the current outstanding equity. In terms of RIL, that's the one which we probably need to address the most. A couple of highlights there, which I'm sure was addressed during the market hours, but what brokerages typically have to say about the AGM, what Citi has to say, it's maintained the neutral rating, but the target price of around 2,750 It talks about Jio focus on 5G ramp up. It talks about retail, where more stake sales could likely happen in the near future. It's talk about new energy, where there is a reiteration of targets, focus across solar, battery, wind, biogas, green hydrogen essentially, and oil and gas too, where there is an enhancement of the exploration efforts which are taking place within that division. Of course, there were also changes which came in. Now the third generation will step in, and Ambani is the board. There is a bit of a rejig happening there. Mukesh Ambani would be on the board for around 5 years, but the changes will continue after 5 years, where the next generation will take over and perhaps be also under the wings to go and further lead on here on. In terms of what Jefferies has on RIL, it's maintained the buy rating, target price of 2,950, and has laid out succession plan with induction. Essentially, that's what Jeffrey has to say, that the company has laid out the succession plan with the induction of next generation. It's also talked about, launching in a couple of products in September, and it's also spoken about retail, which is likely to induct new investors. Perhaps the company also suggested in the AGM that global investors, a couple of global investors were probably in conversation with the company for the retail division, but a bit of disappointment crept in post there were no timelines, concrete timelines, which were announced for the retail IPO, which was the most awaited one by the street. But going back to Osho and checking with him, what does he make out of Jio Financial Services and RIL, which continues, which is today's top loser? Does he think this could be a buying opportunity for the investors out there?
See, for Jio Financials, we are still expecting that the downside is again is a bit questionable, because we can see some kind of more downside in this counter towards the zone of 195-200, which is approximately 15 points from here onwards. So Jio Financials can see some kind of more laggardness in the market as of now, but comparing it with Reliance has comparatively been more consistent, and it has outperformed as of now. So we are expecting that Reliance could be seen some kind of a strong outperformance. And on technical front, once it breaches the zone of 2,500, then from there onwards, we can expect a very strong rally in Reliance in the coming period.
How about Jio Financial Services?
Pardon?
Jio Financial Services, what do you make out of it?
Jio Financial is still having some downside. We are expecting that 200 and 190 zone, it can be tested in the coming on positional basis. So we are still having a very negative sentiments attached to Jio Financials. Once it reaches around the zone of 200, and if it consolidates there for quite a couple of days, then from there onwards one can expect some kind of decent up move. But as of now, there could be some kind of under pressure can be seen in Jio Financials as of now also.
All right, Osho, I'll also want to check with you about what's your reading on Manappuram Finance, a couple of brokerages which have come in after the court has quashed an ED case against the promoter. With this, a significant overhang is removed. What do you make out of it? Do the charts still look attractive to you?
See, overall, if you will be talking about the current financial year, then Manappuram has clearly been in the trend of higher highs, higher lows. As of now, the current correction that can be seen from the zone of 155 towards the zone of 140, that can be seen as an opportunity to accumulate this counter. As of now, we are expecting that 152 to 155 zone can be retested in this counter, and once it surpasses the zone of 155, then from there onwards we can expect a very decent rally also. But at the same time, one should not be very much complacent, because on the higher end, we are still having a target near about 10 points, 8 to 10 points. So we should try to book our profits around the zone of 155. And after that, we can again review the counter for the coming short to medium term perspective.
All right, Osho, we're going to leave it at that. Thank you so much for taking out the time and joining us this morning. All right, let's address the fundamental side of the story. FII trend, macroeconomic data, RIL, AGM, everything put together. Let's get in our new guest for the fundamental story, Amit Jeswani, founder of Stallion Asset. Morning there, Amit. How are you doing?
Hi, Nickey. Good morning. Good morning, everyone who's watching this show. Thank you so much for having me on your show, Nickey.
Pleasure is all ours. What do you make out of the RIL EGM? Top highlights that stood out for you? Something in the likes of perhaps Reliance Retail, where Ambani spoke about the valuation doubling in the last couple of years, 3 years to be precise. And retail, if was listed, perhaps could be one of the top retailers there, top 10 retailers there globally. What do you make out of it? How are you looking at RIL along with Geo Financial Services put together?
So, Nickey, the profits of Reliance Retail in FY23 was 9,600 crores. The profits for the valuation at which the deal happened was 8 lakh crores. That means that Reliance Retail got valued at closer to 85-90 times FY23. So see, the valuation in be it Titan in retail, be it it just validates that retail valuations are going to be high in India. But one thing that you have to give it to Mr. Ambani and Reliance is the way they have scaled up the retail business. They invested. The retail business started only 16, 17 years ago in 2006. Till 2010-11, they were doing near nothing. And then the scale up started. They invested 5,000 crores. And that 5,000 crores today has made around 8 lakh crores of wealth for shareholders. It's just unbelievable the kind of wealth creation, the kind of scale up which Reliance has done. It just tells you so much about the execution capabilities of Mr. Ambani and Reliance. So that is one side. But the more important part for me, I'm telling you, like, because we are buy side guys, we don't have to look and analyze everything. But for us, is the demerger coming? Or any IPO plans. That was the number one, but of course that there was no word on that. The second part was Geo plans, the Geo financial. So that is where we were very focused on. But nothing very large, concrete, I would say, that makes us very, very, very excited as of today. But Geo financial is where I would say the alpha creating opportunity may be there at some point.
Let's also talk about new age companies which have done typically well and have gone on to surprise most of the market participants out there. But, you know, given the kind of correction that these counters have witnessed from the start of the IPO, it is a bit of, you know, overwhelming behavior at this time, or the sentiment which is prevailing right now for the new age stocks. And most of them are a little more hesitant, probably waiting for financials to solidify and give a clear picture. How are you looking at it?
So, Nickey, in my humble opinion, this is just an opinion. This is not recommendations. Me, my family might have exposures. My client might have exposure. If the stock I give examples of. Of course, none of them are recommendations. But in my humble opinion, Zomato should be PAT positive this year. That is what the management has guided. So, Policy Bazaar will definitely be PAT positive. The estimates that we think are between 200 to 300 crores PAT positive. Paytm should do adjusted EBITDA of 1,000 crore plus this year and 2,500 crores in next year. So I believe the game is changing. See, there was a time, Nickey, that all these companies were valued at 10, 20, $30 billion. They didn't have a strong business model. They don't have a road to profitability. Today, these businesses are valued at $5 billion, $7 billion. And people are now saying, oh no, but we lost money in the first year. See, they have now demonstrated their ability to make profits. Loss to profit as a framework. Loss to profit. Companies that move from loss to profit, they typically, historically, create a lot of wealth, and that is going to happen in the entire sector as a whole. Next year, you'll see. You'll see it every quarter, of course, but next full year, financial year, you'll start seeing. So I believe we have 3 companies in this space, and a new tech as our portfolio is 15% exposure. And we are hopefully, we've already made 50, 60, 70% returns on it. But I think that if we get it right, we'll end up making way more than that. So I'm fairly bullish on their business model. And fundamentally think about it. Even like some people say that Paytm might get disrupted. I'll just give you examples. WhatsApp has your payment. If you go to your WhatsApp, you can pay to any of your friends, but no one uses WhatsApp payments because you're so habitual to Paytm or PhonePe, etc. These are habits and very tough to change habits. The lending business is where the game will change for Paytm. That business, see, in 5 years, you've gone from zero in UPI to 12, 13 lakh crores a month. That same way, the lending business is 1.5 year old. I don't know what the lending business will look like. And these are all asset light, high tech, high growth business models. And anyone, I believe they should study all three stocks, Paytm, Policy Bazaar, and Zomato. Zomato, I'm very impressed with the way they have turned around Blinkit. So let's see, we may go wrong also and lose money also, but it's okay.
So out of the three companies that you just mentioned, which one are you most bullish on? Paytm, Zomato, or PB Fintech?
See, that I keep changing. So that depends. If you ask me, as on today, by expected returns, I'm ranking, not by risk. Expected returns, I will say, this is my expectation and these are not recommendations. My highest expected returns is Paytm, PB, Zomato. This is as of today. The lowest risk I will tell you is PB, Zomato, Paytm. So because PB has a very established business model, nothing is going to change there. Zomato is a linear business model. It's a linear business model. That means if Zomato has to double revenues, he has to move from 3.5 lakh delivery partners to 7 lakh delivery partners. Just giving you an example. Whereas Paytm and PB Fintech, are platforms, like proper platforms. If your cost is 100 rupees for selling 1,000 insurance policies, for selling 2,000 insurance policies, also your cost will probably just go up 10%. So there'll be a J curve of profits. It's a non-linear kind of model. Paytm will be about new use cases that you started with payments. You built a very large payment network, and now, like, for introducing a new loan business that they have done very successfully, there was no incremental cost that was invested. So if today Paytm is doing 50,000 crores ARR of loans, they are doing 5,000 crores a month, so ARR is 60,000 crores. If they go to 1.5 lakh crores or 1 lakh crore or 2 lakh crores, there's no incremental cost, and they end up getting 4%. So if loans, 4% is the take rate that Paytm gets. So if the loans go from 50,000 crores to 1 lakh crores, incremental 50,000 crores, Paytm will get extra 2,000 crores of free cash. And there the contribution margin is 80%. So basically, I believe decent money, there's a possibility of decent money, but believe me, if the story isn't going as we think it is, we might exit also these stocks. So we are unemotional with our investments.
Right. I guess that's most of us when, I think most of the retail investors probably, they need to keep in mind that one has to be a little bit unemotional when it comes to overall investment strategies. But just speaking of the financials, I have two-part questions here. One, let's talk about banks. Do you still find that attractive? Because the disbursement growth of NBFCs have been higher as compared to banks in the quarter gone by. There is a bit of NIM compressions which have come through. That's one part. The second part is, the Jio Financial Services also decided to enter in insurance sector to offer in health, life, general cover. Do you think the existing players might just get impacted, the kind of impact that Jio bought in for the telecom players? Do you think it would be a disruption of sorts as and when happens even for the insurance companies?
See, insurance company, I don't think Jio can disrupt banking industry. He cannot borrow below the 10-year bond yield of Government of India. So if you can't borrow less than Government of India, the only place that you can disrupt is on the technology and distribution side. Nickey, lending overall, I fundamentally believe that lending will become digital. No merchant has got a time. 84% of merchants in China take loans online. See, if you want a 2 lakh rupee loan, you'll press a button, your money is in merchants and businesses, you do need loans. You press a button, the loan is in your account. You press a button, the money has gone back. You don't have the time to go to the bank, show him papers. All this will not be there in the next 5-6 years. I'll be surprised if the banking as a whole will change. Distribution of banking will change. Yes, so on retail side is where the disruption is coming, and there are three players who are trying to go for it. One is Bajaj, the listed ones, and then there is Jio Financial, and there is Paytm. These are three large players who are trying to make an impact on these profit pools. The profit pools are going to be massive. That is what I can tell you. I know someone is going to win. I just don't know who. So if someone wants, they can buy all three and pray to God all three win. But one of them will make it very, very, very large. All three players, three fintech players in India, and fourth one probably PhonePe. The profit pools are just massive. So if you look at even Visa or MasterCard, their market caps are bigger than Goldman Sachs and Wells Fargo. All other banks have, except JP Morgan in US, all other banks have market caps lower than MasterCard and Visa. So these are payment effects. And see, the fintech profit pool is going to be very large. And there are only going to be 3-4 players. And some of these players might make it very, very, very large.
Sure.
Your other question is about insurance, is it?
Yes, please. It was essentially about lending. HDFC and ICICI Bank, perhaps. Which of the stocks would you prefer within the banking space, essentially? And would you prefer banking over NBFCs?
We don't prefer. We prefer whoever's doing well. We have small allocations there. So we have both banks that you mentioned in our portfolio. We have NBFCs. We've got. See, but as long as growth is there, we are okay with it. Like we were not very happy when, but HDFC grew at 15% last quarter, so we cut some weight. So we keep doing this. If some of our stocks do well, like 5-star did well for us, we increased weights to 5-star. So we keep decreasing weights based on the ability and execution of the promoters that we invest in. But overall, NBFCs and banking both will do very, very well. In our NBFC space, we want higher growth. So in NBFC, we've got the largest NBFC in our portfolio, Bajaj, is growing at 30-odd%. 5-star is growing at 40%. One very very small cap also, microfinance, which grew at 50% this year. So if I'm buying small caps, I need higher growth of 40-50%. So yes, that's our exposure. And then HDFC and ICICI, you can take at defensives of your portfolio.
Any other theme that you're perhaps looking at right now in the pre-election year, which perhaps would be more thematic in nature and probably positional also from a very near-term perspective?
Like your theme you're asking. So see, overall, there are only 4 sectors where we invest in: consumer, pharma, technology, financial. This is where the largest money, we believe, will be made. Overall, wherever you're seeing growth, see, Nickey, it's so easy. Just fundamentally think about it. VIP industry grows at 6%. Okay, same quarter, Safari grows at 47%. Shopper Stop grows at 5-6%, 7%. And same quarter, your Trent grows at 52%. These are same industry, exact same profit pools. You have consumer electronics, okay? Blue Star grew at 10%. Amber had a negative growth. Voltas grew decently at 20%. EMI grew at 20%. There was one Bihar-based electronic retailer which grew at 47%. So what I'm trying to say is that there is... within a sector also, you need to be with the better performing guys. And if you can, and I can say this for every sector, like even if you see like Titan, this was the first time Titan grew. Last time I came to your channel, that was the day Kalyan came with an update. And I said on your channel that not like we also don't own it, but that Kalyan has come with very good numbers at 33-34% growth. And you see from that 160 levels, the stock has moved to 220 levels. And they are saying of doubling stores in next 2 years in that Moti conference. So, once you get, and they're doing very well. So once market sees 30% growth, the market cannot, it's very tough for market to control, and market including me also. It's very tough because see, I'm not going to overpay for 10% growth companies or 15% growth companies. That game is over. You now need to find growth, and you need to find them early, ride it till you find another growth. But option trading, I would say, is a big theme for next 6-8 months. If you ask me, option trading volumes, that the volumes are going through the roof, and you may want to find one player out there. That may be a new addition also.
All right, Amit, for the lack of time that we have, I think we're just going to end it here. But thank you so much for taking out the time and speaking to us this morning.
Thank you, Nickey. Thank you so much for calling me. Bye.
Pleasure. See you around. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.